Start the prayer.
I think it is mute. Harshit. Harshit, it appears that you are mute. So, thank you, team. As you all are aware that today our discussion is on transfer pricing provision, which is mainly based on the guidance note issued by the Institute of Chartered Accountants of India on Section 92E of the Income Tax Act 1961. And to deal with this subject, today we have our keynote speaker, Rishabh Agarwal also, who is there and will be guiding us on the transfer pricing provisions under the Income Tax Act 1961. So before Rishabh Agarwal starts with his keynote speech on the subject, I would like that our student Shruti Gupta introduce him first, and then Rishabh may please take over. We also have partner Yogesh Parwal also with us, who will also be moderating the today's webinar. So, Rishabh, please. Sorry, Shruti, can you please introduce Rishabh Gupta ji, Rishabh Agarwal ji?
Good afternoon, all. We at Kalani and Company are profoundly joyous to welcome our esteemed guest, Mr. Rishabh Agarwal, in today's Saturday class. It is an honor and privilege to introduce the ex-co-opted member of the International Taxation Committee of NIRC of ICAI. Mr. Rishabh Agarwal is a merit holder chartered accountant who has polished his talents in direct taxation, international taxation, transfer pricing, and FEMA. Not just this, he has honed his skills through both professional experience and education. He has earned his master's in law degree in international taxation from the prestigious Vienna University of Economics and Business. In addition to this, his knowledge is evident in his writings, as he has contributed to several pieces published in highly regarded journals specializing in international taxation. We are really very glad to have you here, sir, today with us.
Thank you, Shruti, and thank you, Bhupendra sir, to give me an opportunity, to come before your students. And because I'm really scared from CA final students per se, because their knowledge, they read a lot deeply when they prepare for CA finals. So I'm very scared because they know provisions offhand, and when you are working, you always refer the act. So I'm always perplexed before the CA final students, and when they ask a question, I'm like, no, I will get back to you after I read the act. Because when you are preparing for a CA final exam, you remember the provisions by heart. But once you get into practice, you always, read the provision again. So thank you very much to Bhupendra sir and your firm, and to give me this opportunity to present before CA students. And probably this is my second or third session for CA students, or students itself. So if I make a mistake, please forgive me and do correct me wherever you feel I have gone wrong. So as Bhupendra sir requested to me earlier, before we get into the subject of transfer pricing, I'll take quickly 2 minutes on the importance of research and updating yourself when you're working in tax law, or maybe any sort of law. So I was telling Bhupendra sir before the session that Saturdays are my days where I write articles, and during the week I collate the topics on which I want to write, and send them out to different journals so that they can be published. So there are a lot of forums where you can write. It's not necessary that you have to write an article or research on a topic that's trending. You can research on a topic that appeals you. Could be transfer pricing, could be any topic from income tax, could be a particular section from income tax, or if you like GST, could be a different topic from GST, something from finance. So what you have to do is just pick up something that appeals you. You like to read that, you read it, and try and make it in a concise manner so that even a layman understands what you're trying to explain, because all these terms and all these subjects are very technical, but at the end it's the business person who needs to understand these before doing the business. So if you have to go into a client facing role or something of that sort, so you need to learn how to dumb down those technical things for a business person to understand, because you cannot go on and tell them like, okay, what is a arm's length price, what is transfer pricing. So you need to put it in a layman's term that this is transfer price, this you have to do, this is our responsibility, and we have to be very clear with the business owners. So I would request all the students, whatever time they get, you can start now writing, researching, and there's a lot of information available over the internet, and probably you have more resources and access to tax journals where you can go in and take ideas on your writing skills. This will also help you in your CA final theory exams, because at last you know how to present a provision in a very good manner. So taking ahead, I think I will quickly go into the subject for the day. That is the guidance note issued by the ICI on section 92E. That is the documentation, or let's say the certificate from accountant, as it says. Probably in this session, Sakshi, Harshit, and Manan from your firm will be continuing the topic and giving you insights on this topics, or the first four chapters that you are covering over here. And I will give you a very brief overview and share a few examples with you, and not go very deep into the case laws, but obviously whatever examples I share comes out from the case law and jurisprudence that has been decided in India. So before we start, I'll quickly ask Bhupendra sir, do people have access to the chat? I mean, if I ask a question, they can put their answers in the chat box.
So I think you have to speak it.
Oh, yes,
So,
we
so
have access.
okay, perfect. So I'll quickly ask, what do you understand by the term transfer price? I mean, not transfer pricing, transfer price. There are two words of simple English. What people understand by the term transfer price? I think we have something here. Yeah. So if we, separate these two words, transfer and price, so it is basically a price that you will charge for transfer of anything. Yeah, exactly. As we have answered, consideration to be charged in exchange of any goods, not just goods, could be anything, could be a service, could be a loan because you charge interest for loan, could be share capital because at last you will charge dividend from the share capital. So it is a price that you charge for transfer of anything and everything. So that's how transfer price is related, and the concept comes in. You'll also have this concept in your costing, where one department of a company is transferring something to the other department, and you have to charge an internal pricing, because at the end, if you calculate each department as a profit center, you will have to see what exactly is the cost that has been incurred by that department. So transfer pricing per se is not just in taxation; it's everywhere. If you in your firm, give something to someone else or to another article, you say, "Oh, I'll sell you it for maybe 10 rupees or 20 rupees." So that's also a transfer price. So in India, we have very limited sections that are concerned with it, and those sections range from section 92 to 92F. Obviously, there are a lot of them in the middle, and if you see section 92, that is the base, or the heart of transfer pricing in India, which says that all the international transactions and specified domestic transactions are to be entered at an arm's length price. So here we have three key terms: one, international transaction; second is a specified domestic transaction; and then third is arm's length price. So we feel that arm's length price is a demon when we do transfer pricing, because everything is revolving around arm's length price. How to calculate arm's length price? What is the right arm's length price? The methods of calculating arm's length price? The adjustment to arm's length price. So everything comes around, and is running around arm's length price in transfer pricing space. If we talk about, it's not just in India; it's a global phenomena. And transfer pricing per se was introduced, to give a proper profit allocation to every element in the group or every node in the transaction. There could be, let's say, 10 entities in a group structure. At last, we understand the profit is of the ultimate parent or the ultimate shareholder. But all these group entities are structured in different countries. So where to tax, how much to tax, all of it was the birth reason for transfer pricing in the global arena. So if we go ahead, sir, do I have the right to share a screen? I just want to share a short diagram that I have.
Yes, I think you can share it.
Yes. Because I want to show, because it's a very interesting diagram. It's, I'd say it's already there everywhere. It's nothing original, but
It is there.
yes. So this is the heart summary, everything of transfer pricing that that you've studied, that you will know in today's session, and in all the sessions that you will conduct on this 92E guidance note. So here you can see a lot of elements. All the terms of section 92 are here: international transaction, specified domestic transaction, and arm's length price. So if you look at the left side, that is the transaction under the study of transfer pricing. And on the right side is an independent transaction, as we call it. So when we look at what is an arm's length price, so if you see directly from the diagram, it will say arm's length price is the price where the independent entities are entering into a transaction. What transactions? Could be for goods, services, intangibles, loans, and specified domestic transactions as well. So the main premise of transfer pricing is that when there is a related transaction or a transaction between related parties or associate enterprise, as we call it, on the left side, it shall be equivalent to the price charged by independent parties. So that's the arm's length price. So arm's length price is no demon. So arm's length price could simply mean what I would charge Bhupender sir for a professional service or for an advisory, or what Bhupender sir, is charging to his clients, which are not related, maybe not his family member or something of that sort. We'll see who are related parties or associate enterprise ahead. So arm's length price is very simple. It's just that what two independent parties or how two independent parties are transacting in a independent scenario, or where there is no relationship among them. As we've discussed, that there are few sections, all the sections are here, if you'll see, which revolve around transfer pricing. And when we talk about section 92, that says that it is international transaction should be entered at arm's length price. So for going to international transaction, we again come to section 92B. How I used to remember it was 92B, Bhar wale transaction, international transaction. Simple as that. Because when you have to keep it in the memory. So under section 92B, then it says what is an international transaction. So international transaction is a transaction between two associate enterprise. So another term comes up called associated enterprise. So if you see the section in the chronological order, associated enterprise is before international transaction, but you have to refer to the section of international transaction in order to get to the associate enterprise concept. So it says that any transaction between associate enterprise shall be entered at an arm's length. I'll show you here. Yeah. And where either of the associate enterprise should be a non-resident. So if there are two parties in an international transaction, one of it has to be a non-resident, only then it will fall under the category of an international transaction. So you can see the transaction could be for anything, property, intangible property, tangible property, and under section 92E, the form that is prescribed is form 3CEB, also called TP audit. It has separate clause for each sort of transaction and a residual catch-all clause for transactions which are not covered. So anything and everything that has a bearing on your profits, income, losses, and assets comes into that form, and you have to benchmark it. You have to see whether it was an international transaction, reporting is required, benchmarking is required, and what was the arm's length price. So a very contentious issue comes here for share capital, because it does not, have effect on any of these terms that you could see: profit, income, losses, or assets. But there is an explicit clause for share capital transactions as well in that form. So we do consider it for the reporting purposes, but usually not for the benchmarking purposes if it is issued at par. Then once you see another term is introduced here, associate enterprise. Who is an associated enterprise? So let's see, an enterprise in relation to other enterprise is an associated enterprise, or a company A in relation to company B is an associated enterprise when it has power above its management, control, and capital. These are the three terms that are mentioned in order to establish the relationship. So here management is like directors. If you can have the ability to control the board of directors, their decision making, or to appoint the board of directors, then it is considered that entity A has control over entity B. Similarly, control is established by the voting power, voting rights, and share capital, or share is very simple, that you have the majority shareholding in the enterprise. There's another clause 2 of 92A, again, that says that one enterprise in relation to other enterprise could be an associate enterprise if both of them have a common parent. I'm simplifying it as a common parent, but again, the essence of management, control, or capital is checked. So we can take a scenario that when entity A has control over, let's say, entity B and entity C. So B and C here are related parties as per clause B of 92A. A and B and A and C are related parties or associate enterprise as per clause A. So this is the basic, let's say, the relationship that you have to establish. However, under subsection 2, then you have what is a deemed associate enterprise. So there's a exhaustive list of what is an associate enterprise or deemed associate enterprise under subsection 2. And all of them are not apparent also from the group structure. So when you are analyzing a group structure, you could see the management control and capital part, like which all entities will be related parties. But there is a clause, if I could show you, which says, which talks in the concept of raw material. If you see clause H, it says 90% or more of the raw materials is manufactured for a manufacturing or processing is bought by the other enterprise. So technically, if enterprise A is selling raw material to enterprise B, and for enterprise B, that raw material purchase of that raw material exceeds 90% of the total raw material that it is buying. So A and B become related parties, and you have to report these transactions under the form and also benchmark them. But the problem comes here, the issue arises is that you cannot identify this until unless you have an explicit or elaborate call with the client to understand the business model, and like you analyze the full financials. So here, not just the face of the financials, but the notes. You have to see the parties from which the purchases are being made. Or if you see like clause G over here again, that is also not apparent from the group structure to establish whether it's a deemed associate enterprise or not. Because again, you have to see the manufacturing process is dependent upon the intangible of who is the real owner of the intangible. So these are few issues that arise that you cannot check explicitly from the group structure, and you have to deep dive into their financials and the business models, what assets they have, what are the risks that each party is bearing, and what are the functions that each party is performing. So again, so let's move ahead, and I'll take you.
Harshit, can you mute yourself? Harshit, please mute yourself. Harshit?
Yes, sir, I have.
Yeah, continue. Rishabh, you can continue.
Sure, thank you. So I'll take you a step back again because we discussed what is an international transaction. So like associate enterprise have a clause for deemed associate enterprise. Here also you have a clause for deemed international transactions. So that is one of my favorite thing to analyze when I have a TP client, because again this is not very apparent, let's say from financials over here and even from the group structure. And even if you study the financials deeply, this will not be very apparent. You can see it quickly from this diagram that there's an independent party and then associate party with an Indian company. We are transacting with the independent party, but there is a existing contract on the transaction between the independent party and associate enterprise. This could happen like I am selling goods to A, that's an independent party. I charge whatever, but independent party A and my associate enterprise have already a contract that whatever goods I am sending from India to Japan, they'll send it to my associate enterprise. So it's like a safeguard mechanism that has been, put it in the law, and it's a global phenomena that happens because otherwise what you'll do is you will establish an independent party and you can go around the transfer pricing provisions, and then you'll not have to benchmark. So this is one of my favorite things. It happens a lot in terms of let's say financing transactions from banks, where guarantees are given, or where explicit corporate guarantees are given, or there's a, let's say, the parent company is giving the bank the same amount of deposit, and that deposit in form of loan is given to the Indian company. So there's a lot of use case scenarios where you have to see this particular area of deemed international transaction, and it is a very litigative issue. So always be careful when you are let's say analyzing these transactions and reporting these transactions, because there's a separate clause in form, if I'm not wrong, for deemed international transactions. And so I think I am left with 5 more minutes. So I'll quickly, go through the other sections which lie at the core of transfer pricing. So main is again computation of arm's length price. As we know what is an arm's length price. There's 6 methods mentioned. And I think in some other session, you'll be taking those methods in detail. 92D talks about the documentation. We have a typical three structure documentation requirement of a local file, master file, and a country by country reporting. The elements of the local file and master file are classified in the income tax rules. Simple to make, but difficult to read. Once you get the hang of it, there is no going back. Super easy to do it. But obviously, making the document is not the tough part, but to have that information and analyzing it so that you are able to make the document is the tough part. The benchmarking analysis and everything. Then we have, so sorry, I'll quickly take up that amendment also that has come in the budget. Earlier, we used to have 30 days to submit the documentation. So what the clients used to do is, they'll get the TP report, TP audit done every year, but they'll only get the TP report made or TP documentation made for the year in which their assessment has been opened up, or his assessment is under scrutiny under the TP assessment. So now probably that will change, because earlier 30 days were enough from the day of notice to make the whole study. And there was another extension of 30 days that the SSC had the right at the discretion of the officer. But now that has been reduced to 10 days with a total extension or a total combination of period of 30 days. So now it will get tricky for the clients to have that documentation ready within 10 days, because the consultants, if it is, let's say, a software industry or something which is very popular, then probably you could do it. But if it's a niche industry, let's say some chemicals, or we had a client that used to manufacture chemicals for shoes, and to find the comparables for that client was a task for us. So I request all the clients who are here in the call, as sir mentioned earlier, and all the consultants also who are here, that do push a little bit your clients to maintain prompt TP documentation. I understand it's a cost, but the penalties are equally high. The penalties to not furnish the document is 2% of the transaction. To not maintain a document again is a 2% of transaction. Then there is again 1 lakh rupees of penalty for late submission. So try and maintain prompt documentation, because it will at last help you, and it will at last reduce your litigation costs and penalties. The consultant will earn anyhow. So that's a request, and that's a pleading to the clients and to consultants also, because since that amendment came, I am telling all my transfer pricing clients that what you used to do, come to me in 3 years once whenever the assessment open. That will not happen, because now it will be tough for us to make it in 10 days. And now when the officer is also having the power again to give extension, but only up to for the next 20 days, he'll be very picky in giving you extension. So be aware of that. Moving forward, we have section 92E. That's the accountant's report, and I think that's the core of this session and also of this guidance note, because this guidance note is for how the reporting has to be done. So there's a key difference between 92D and 92E, is that for 92E there is no minimum threshold. So even if you have 1 rupee of international transaction, you have to report it. Have to report it. There is no sideways, no exception, exemption, nothing for that. But for documentation for international transactions, you have a threshold of 1 crore of aggregate of all your international transactions. And for specified domestic transactions, again, you have for 20 crores. I mean, the scope of specified domestic transaction reduced when the transactions of under section 48 2B were removed from the purview of HDT. But now with this cooperative society coming in with the preferential taxation regime, probably something would kick up. But this will affect mostly the dairy industry, agricultural industry, and tax education in those cooperatives is not very much. So let's see how we'll take ahead. And probably, sir, I would request we can do some industry specific thing as well later on. And that could be more beneficial for the clients and the public at large. Then under 92E, I told you we have separate clause for all types of transactions, and it is a annual compliance that you have to do. So please make sure it's in time, it's proper, there are a lot of there are many times there are discrepancies between the most appropriate method of transfer pricing selected in the form 3CEB and the documentation or at last which you are benchmarking, because chronologically you are supposed to do the benchmarking analysis before, make the TP documentation and then sign the TP audit form. But I'll not put any comments on how it actually happens. Everyone and anyone knows how it happens, and it's not just in India, it's globally. So just make sure that you are very clear with the transactions that you're putting in, and whenever in doubt, try and spend some time before selecting the method. Though the tax authorities do not create a fuss about change in method, but at last you have to justify it. So make sure you have at least for the recurring clients, you have the right method in the form 3CEB. Few definitions have been given under 92F. I mean, you can always refer, you always need to know those definitions. Arm's length price is also, I think, defined in 92F. So this is, I would say these two diagrams sum up the core for transfer pricing for me. This is a very common diagram that you'll find in every article or every book that's published for transfer pricing. So I would say keep reference to it, and always be careful, because transfer pricing is an area in the income tax where the penalties for anything doing wrong are very high. So, to safeguard your interest, your client's interest, your liability, please be very careful while signing TP audits. Do proper KYC for your clients, and that's the habit has to be inculcated from now when you are at the level, and probably be in practice later on, or maybe be in another consulting firm. But you should have this practice of doing KYC for the clients always. So I think with this, I'm over with my time and giving a brief overview. And I would not like to take the limelight from Sakshi, Harshit, and Manan over here, who have prepared a lot to give this session. In the next 2 hours, cover the first four chapters of the guidance note. It's a big task, and I'll quickly unshare. I think I've unshared my screen. If I have not, please let me know, and I'll just stop here.
That has been answered. So, see, before Yogesh start moderating the class, one questions which is basically in my mind is about that this UAE is going to introduce the income tax from 1st of June 2023,
Right.
and wherein the tax rate is basically a flat 9% on the income of the assessees over there, corporate assessees over there. Of course, subject to certain specific exemptions. So, and if we see the OECD model, OECD countries, they say that the minimum tax rate which has to be charged by the countries, OECD countries, is basically 15%. So, always there will be some or the other try by the corporates that how they shift their incomes to UAE so that there is a lower corporate tax rates. So how do you see this particular situation as an opportunity for the consultants, as well as any other thing which you have in your mind that yes, this is one need to be take care of while particularly dealing with the new UAE law?
Sir, I'll try to be as concise as possible about it. So even in UAE, so the 15% minimum threshold that you have told me, mentioned is for companies on which Pillar 2 apply. That is a turnover of 750 million euros. I mean, there's still a lot of companies that fall under that, a lot of M&E groups that fall under that. So for that, UAE has mentioned that they'll take out a regime that is in line with Pillar 2. So probably the groups that fall will at last be taxable at the rate of 15% even in UAE. However, if you see that that 9% rate also that has been come out is pretty low in terms of if you see just in the Middle East or in the GCC countries, it's the lowest. So so I would say these countries have always been an opportunity for tax planning, and businesses should consider this as a cost, no matter how long you will keep on running, is the question. So if I'll take an example of Ireland. So Ireland has a headline rate of 12.5% on corporate tax or for corporate tax. So what they are doing is for the pillar two country for the pillar two companies, they raise it to 15%. However, like we have export duty scripts or something of that sort, so they are giving a rebate to them in another legislation that is not related to income tax or corporate tax for the same amount. So this is going to happen because otherwise, you see the effective rate for the bigger tech giants like Apple, Google, Starbucks, for that matter, are very low, and they have been criticized in EU for that because they were not giving their actual share of taxes in those countries and parking their profits somewhere else. But I would say in this context of UAE, I think we'll have to see how tough is the enforcement, because my feedback in the cases of VAT in UAE is that the enforcement is not very much. As per the statistics, in the last 5 years, only 3,000 notices have been issued for VAT. So again, if you see, if that's the level of compliance or enforcement of corporate tax also in UAE, then you can still do anything and everything that's possible, because at last no one's getting caught. Like, I mean, even for the opening balance sheets, the GAR provisions are applicable, but people still are doing their impact assessment and are planning how much profits they have to keep in UAE now, because earlier they used to keep everything in UAE because it is non-taxable, and then they could have withdrawn from there, become a UAE resident. There were a lot of tax schemes that were going on, but now that 9% cost will be a factor. I say it's a cost because some place you will have to pay, be it in
True.
India, US, Europe, UAE, wherever. So that 9% is a cost. You might get a credit, you might not get a credit, depending upon your transaction, upon your structure, and other factors as well. So this cost will become, let's say, an X factor or a pivot when you are deciding your whole corporate policy of the group, corporate tax policy of the group. So I think I've tried to sum up what you wanted to ask me. But again, this is space to watch, and
Yeah.
been researching on that very actively right now. And
True.
so let's see how it goes.
Yeah. In fact, there are a lot of things to mention, but due to time constraints, I would just request Shruti to please give a vote of thanks, and then Yogesh to please moderate the session, and would request Rishabh to please stay till it is possible for you to stay in this particular webinar.
Definitely, sir. I'll be there. Probably just switch off my video, but I'll be there.
Okay. So, Shruti, please.
Good afternoon, everyone. It has been such an honor to be a part of this wonderful Saturday class. On behalf of the organization Kalani and Company, I would like to extend my heartfelt gratitude to our esteemed guest, Mr. Rishabh Agarwal, for making it the time to be with us today and inspiring us and making this session a knowledgeable one. Thank you so much, sir.
Thank you very much. And as I told you, I'm very scared of CA final students. So if I have misspelled a provision or, put a comma, full stop right here and there, so please omit that. I know you have sections at your heart, but unlike us professionals who get dumb once we qualify, so we look at the act for everything and anything. But this is one thing that I've learned, and those would be my parting words, is that whenever you are in a field of law, could be anything, tax, non-tax, corporate, or whatever, reading the act every time you have a problem, or reading the bare act every time you have a problem, will make your grip more strong. It will help you in better interpretations, and you'll be able to have it at your heart the more you read. So I still prefer and I would request that if you get a query or if you have a question in front of you, no matter how sure you are of what provisions are applied or what is the solution or what is the outcome of that situation, but still always go and refer the act, because for your overall growth, that is the main thing, or that's the core that will help you to have, to have an expertise. When we say expertise, it doesn't mean that you have everything in your head. You have in your head where to look, and you have in your head how quickly you can look and give the solution. So that's a little different from what we practice in India. But I would say that always look to the Bare Act, try and make your interpretations. If you don't understand, try and Google it. If you don't understand, try read articles, find articles, and see what authors are interpreting those provisions. And if you don't understand even after that, then give me a call for transfer pricing and international tax.
Yeah, thank you, Rishabh. Yogesh, please, you can now moderate the rest of the session.
Sure, sir. Thank you. Thank you, Rishabh. That was really very helpful to have you. And your words were quite insightful. The overview that you have given is quite detailed as well as crisp. And now I'll like to hand it over to Harshit to take the first session. So Harshit, over to you. You can take us next.
Good afternoon, everyone. Welcome to today's Saturday class. I, Harshit Bansal, along with Sakshi Jain and Manav, are here to present on the topic overview of transfer pricing, which is based on guidance note on Section 92E of Income Tax Act 1961, published by Institute of Chartered Accountants. So this is the 9th edition of guidance note issued by the ICI on October 2022. Before this, ICI has issued eight more guidance note from time to time, updating it. The first guidance note issued by ICI was on April 2002. After that, ICI has updated the version of guidance note according to the changes that are implementing in the market, and all the new sections are adding in the law. So this is the overview of what we are going to discuss in today's Saturday class. We will be discussing about what is transfer pricing and what general meaning of transfer pricing is, what are the applicabilities of transfer pricing provisions, what are the associated enterprises, responsibility of stakeholders, what are the international transactions and domestic transactions which are on which transfer pricing provisions are applicable. So what is transfer pricing in general? As Rishabh sir shared that transfer pricing refers to the price charged for any charge for transfer of any property. Property include goods, service, tangible. It can be tangible property, it can be intangible property, etc. So in relation to the Income Tax Act and the provisions, what is the meaning of what transfer pricing refers to? So it refers to the pricing at which an enterprise transfers physical goods or tangible goods or services to associated enterprises. So इसका मीनिंग है कि अगर जो डिटरमाइन करेंगे जो एंटरप्राइजेस जिसपे ट्रांसफर करेगी गुड्स और सर्विसेज को, मतलब एसोसिएटेड जो एंटरप्राइजेस है, रिलेटेड पार्टीज जो ट्रांसफर करेगी, उसके ऊपर ये प्रोविजंस लगेंगे. So my question to all is, what are the factors which may affect the determination of transfer prices? So can anybody in the class can point out few factors?
Cost of the goods can affect.
So cost of production, market forces,
Taxation rate.
tax rates. So as said by Asta, tax rate. Asta, can you tell me how tax rate can affect the prices?
Rishabh sir also explained tax rate. जैसे कंट्री A है, उसके अंदर टैक्स रेट हाई लग रही है, और उसके अंदर कोई कंपनी और उसकी जो एसोसिएट कंपनी है वो किसी और कंट्री में, कंट्री बी फॉर एग्जांपल, उसके अंदर टैक्स रेट्स कम है, तो कंट्री ए अपने गुड्स कंट्री बी में ट्रांसफर कर सकती है, एंड देन कंट्री बी उसको सेंड करेगी तो एट अ लोअर टैक्स रेट सेंड करेगी, तो वो प्रॉफिट आफ्टर टैक्स ज्यादा बनेगा.
Let me explain it. For example, एक कंपनी है M Limited, which is an exporter based in India. M Limited को अपने गुड्स एयरलाइन में सेल करने हैं, which at an average price of 20 rupees per piece. So the cost of production for M Limited in India is 10 rupees per piece, and average sales, if we take, is 10,000 units. So the profit for the M Limited, if for the 10 rupees gross profit will be 1 lakh rupees. So tax, if M Limited export such goods at 20 rupees a price, then it has to pay 25,000 rupees of taxes, average 25%. I have taken the tax rate. The M Limited has to pay 25,000 in the tax in India. So अब M Limited ने क्या किया कि अब थोड़ा सा उसने क्या किया, एक सब्सिडी बना ली एयरलाइन के अंदर खुद की। उसने क्या किया कि एम लिमिटेड ने सेम सब्सिडी को 12 रुपीज के अंदर, सेम प्रोडक्ट्स को 12 रुपीज के अंदर एस लिमिटेड को सेल कर दिया। और एस लिमिटेड ने क्या किया, उसको आगे एयरलाइन में सेम पब्लिक को वही 20 रुपीज के अंदर सेल कर दिया। सो जो by 10,000 units, it is 20,000. And if we multiply it by average tax rate 25%, M Limited has to pay 5,000 as tax in India. Here now airline, where the tax rate is 12.5%, which is lower than India, the S Limited has to pay the tax of 10,000, not 80,000 rupees of profit. So the total tax expense for M Limited as a parent company will be 15,000 rupees, which is lower than what M Limited has to pay if M Limited was selling directly to the customers of airline. Now, what are the key objectives of transfer pricing provisions? So the objectives are on from the point of view of both the income tax authorities or with the point of view of accountants. So for the income tax authorities, they can determine the true tax that has to be paid in the country. They can ensure there is no avoidance of tax. For the accountants, they can analyze the true performance of each and enterprises, and so these are the relevant sections. So these sections, section 92 is a part of chapter 10 of Income Tax Act 1961. So can anybody tell me what is the chapter 10 is about? Chapter 10 of Income Tax Act. So chapter 10 is about special provisions regarding avoidance of tax. So these are the sections under the chapter 10 of Income Tax Act 1961. Starting with the applicability of provisions of transfer pricing. So as per section 92 subsection 1 of Income Tax, any income arising from an international transaction shall be computed having regard to the arm's length price. It is a general law that has done here. इसके अंदर बस इतना सा बता रखा है कि कोई भी इनकम इंटरनेशनल ट्रांजैक्शन से होगी, that shall be on the basis of determining that income shall be on the arm's length price. अब जो एप्लीकेबिलिटी है इस सेक्शन की, वो सेक्शन 92 के अंदर बताई हुई है। और सेक्शन 92 के अंदर कहा है कि for attracting these provisions of transfer pricing, these conditions shall be fulfilled. Condition number 1, there must be international transactions and even specified transaction. There are specific domestic transactions on which transfer pricing provisions too applicable, which will be discussed in ahead. And those transactions, international transaction, specified domestic transaction, that shall be between 2 or more associate enterprises. And such transaction shall be in the nature of purchase or sale. That can be in the nature of purchase and sale of tangible or intangible property. It can be provision of service. It can be the service of lending, borrowing of money, allocation of cost, expenses, benefits, and or any other transactions having a bear on profits, income, losses, or assets of such enterprises. So, as per section 92 subsection 3 of Income Tax Act, these provisions will not apply where the provisions relating to the transfer pricing has an effect of lowering the tax revenue in India. So it is given in the section, and this section will apply only where there is increase in tax revenue for the income tax authority, or there is a true when there is true tax revenues are happening for the income tax fund.
So this, just to add what Harshit mentioned about that subsection 3, it really clearly says that subsection 3 is not applicable if the application of these provisions has the effect of reducing the income or increasing the losses. So in case if the Indian company has charged a higher margin to its any of the associated enterprises, for example, at 15%, and during the benchmarking study or the ALP study, if it's there that even a bit lower bench or lower profit margin of 12% could have also been charged, then these provisions cannot come to rescue the Indian entity, because this will ultimately reduce the tax base for India. And the legislation has been introduced under Chapter 10, which is for avoidance of taxation, which, like the term says, the legislation is for avoidance of taxation. And therefore, you cannot take rescue of these provisions to reduce the tax liability or the tax base in India. And therefore, this has been expressively provided under subsection 3. Even just come to the previous section. Even if you read section 92, which is like the mother of the entire transfer pricing provisions, it covers income, like the first sentence says, any income which is arising from an international transaction will be completed having regard to the ALP. So the obvious question that should come to your mind that the income, why not expense? Where is expense gone? Where is expense gone? So even in section 92, there is an explanation which says that allowance of any expense will be done having regard to the ALP. So the transfer pricing provisions are attracted both on the credit side of the P&L, which is your income, that has to be at the ALP, as well as on the debit side of the P&L, that has to be at the ALP. If any expense which is sitting in India books is not at ALP, for example, if it is at a higher amount which is sitting as compared to the ALP, then there can be an adjustment to that expense. So both income and expense is covered under section 92.
So these are the three key words that derive from this definition. First is associated enterprises. So it will be covered under section 92A of Income Tax Act. And the second definition, second keyword is international transaction, which is covered under section 92B, and specified domestic transactions, which is covered under section 92BA. And at last, arm's length price, which is covered under section 92F, the definition of which is covered under 92F subsection 2. So starting with the section 92A, associated enterprise and deemed associated enterprise. So this is a combination. This is a combination of two words: associated enterprise and enterprise. So first, understand the meaning of enterprise. As the definition of enterprise is given under section 92F of Income Tax Act. So the general meaning of enterprise means enterprise means a person who is or has been is proposed to engage in any activity relating to the production, storage, supply, distribution, acquisition of goods, know-how, patents, or many intangible assets. It also includes the provision of services, any carrying out of any work in presence of contract, in investments, loans, or business acquisition, holding, underwriting, and dealing in shares. So, as per section 92A, the meaning of associate enterprise is that enterprise which participate directly or indirectly or through one or more intermediaries in the management, control, or capital of the other enterprise shall be regarded as associate enterprise. So here, three keywords that we have to discuss: management, control, or capital. These three things has to be there for making two entities associated enterprises as per section 92A. For example, A Limited, for example, even there is direct or indirect. The control participation in management, capital, or control can be direct or indirectly. That indirectly to any intermediary, subsidies, etc. So participation in two different companies, participation in management, capital, or control in two different companies, they both will be associated enterprises. But there was an amendment in
let's explain it a little bit more. So, see, like Harshit mentioned, this is 92A, right? 92A has two subsections. One is subsection 1 and second is subsection 2. Subsection 1 provides you a simple definition, or it tells you what is the meaning of associate enterprise. And subsection 2 refers to those transactions which are regarded as deemed associated enterprises. Right? So 92.1, like he said, directly or indirectly, and the three terms which are important over there is management, control of capital. If there is a direct or indirect management, control of capital by one enterprise into another enterprise, it's covered. And what is the meaning of term enterprise? It's in the previous slide, the term enterprise is there. It covers everything under the sun. So even when I was reading this definition, it was like everything is covered. What's left in this? So I just thought the enterprise, enterprise sub covered, because it starts with enterprise means a person. So you know, person has been defined under the act, which covers all kind of SSCs. And so the language of this definition, enterprise, is so vast that I think that everything under the sun is covered as of now. So everything is an enterprise, right? Now, what's important is associated enterprise. Therefore, we are referring to section 92A, and 92A as like one subsection 1, which gives the simple definition, and deemed international transaction, deemed associated enterprises is in subsection 2. So he has given you the previous slide. No, this one. Yeah. No, the next one. Yes. So over here now, even under the subsection 1 of 92A, those kind of transactions are also covered. Like in this example, if you see, it's written that Mr. A, it's participates manage, he participates in management or capital or controls A Limited, and Mr. A also does the same for B Limited. So by virtue of insertion, by virtue of this provision, both A Limited and B Limited are associated enterprises of each other, even though there is no capital management or a control between these two entities. Then also A and B are AEs for each other, and whenever the transfer pricing specie EV report will be filed either for A or B, they will have to report each other in their reports as their AEs. Now we study on the, okay, this is subsection 2. Subsection 2 is for the deemed associated enterprise, and Harshit will explain that what is the amendment that was got by the Finance Bill 2002, and what all kind of AEs are covered or deemed AEs are there, which are in the 92A subsection 2.
So now, according to this amendment, subsection 2 तीन situations थी, management, control और capital वाली. अगर किसी entity के अंदर वो कोई entity है, वो दूसरी entity के अंदर वो करती भी है, participate करती है, तब भी जब तक ये subsection 2 के अंदर जो clauses दे रखे हैं वो satisfy नहीं होंगे, तब तक वो associated enterprise नहीं होगी, two entities. So as per this, the definition given in the guidance note, it is proposed to amend the subsection 2 of the said section to clarify that the mere fact of participation of one enterprise in the management or control or capital of the other enterprise, or the participation of one or more person in the management or control or capital of both the enterprise shall not make them associated enterprise unless the criteria specified in subsection 2 are fulfilled. So for making two entities associated enterprise, they have to satisfy the clauses, the conditions which are given under subsection 2. So subsection 2 has clause from A to M, has many situations which need to satisfy. So as per clause A, अगर एक entity है A, अगर वो उसके अंदर 26 से ज्यादा, 26 और more उससे ज्यादा की शेयर होल्डिंग, अगर उसके अंदर इक्विटी शेयर होल्ड करती है ऑफ वोटिंग पावर, 26 से ज्यादा % का वोटिंग पावर होना चाहिए दूसरी एंटिटी के अंदर टू बी एसोसिएटेड एंटरप्राइज, which can be directly or indirectly, which can be directly either by holding the shares in associated enterprise, or by if your subsidiary or any other company, your little company is holding shares in the other company, it will also make you make the other company and you the associated enterprise as per the diagram given. So this example here is that A Limited holds 42% of preference shares in B Limited. So whether B Limited is an associated enterprise of A Limited. So as so answer is no, because preference shareholders has no voting power in general decisions of the company. So you need to have the voting power to of more than 26 or more than 26%, so that the two entities can be associated enterprise. There's one more example is Mr. X holds 15% differential voting rights, equity shares with voting power of 40% in A Limited. Whether A Limited associated enterprise of Mr. X, yes, because it does not matter the how much share you own in the other entity, but the voting power is that the voting power matters. You have to have the 26 or 26 more than 26% of voting power to be associated. So the clause B is just a addition to clause A, where if a common person, let's say A Limited of UK, if A Limited holds 26 or more percent of shares of voting power in B Limited of Germany, and the same in C Limited of India, then B Limited and C Limited will be the associated enterprise. Even though even though B Limited and C Limited does not have common shares among them, even then, because A Limited is a common parent that is holding 26 or more percent of voting power in both of the entities, they will be deemed to be associated enterprise. Or these holdings, it can also be through intermediaries like subsidies, etc. This holding of shares can be direct or indirect both. So this is a question for you all. You all can read it and answer. Anyone? Anyone else? Associate. Okay. Associate. No. Why?
Does not hold 26% of votes.
So how much voting power?
CA Limited holds 100% in B Limited, and further B Limited holds 10% of equity share in C Limited. And neither A Limited holds 26%. I mean,
No. So I'll answer that the answer is no, because the total voting power here is 17%. So ये ऐसे है कि देखो A लिमिटेड पहले तो B लिमिटेड के 100% ओन करता है, तो डायरेक्टली और इनडायरेक्टली दोनों केसेस के अंदर होता है. तो B लिमिटेड एक बार के लिए 100% ओन करता है, A लिमिटेड के अंदर A लिमिटेड B लिमिटेड के अंदर 100% ओन करता है. अब वो 14% इक्विटी शेयर C लिमिटेड के अंदर भी ओन करता है. ठीक है, एक तो 14% ही आ गया. उसके बाद B लिमिटेड जो है वो 10% ओन करता है सेल. बट सी लिमिटेड ने क्या किया कि 50 जो उनके प्रेफरेंस शेयर होल्डर्स है, उन्होंने एक प्रेफरेंस शेयर अलॉट करे जिनकी जो टोटल वोटिंग पावर है वो 50% कर दी. एक ऑर्गेनाइज उसकी सी लिमिटेड ने कुछ प्रेफरेंस शेयर्स इशू करे जिनकी जो टोटल वोटिंग पावर है वो 50% ऑफ टोटल वोटिंग पावर है उनके पास. ठीक है, तो इक्विटी शेयर होल्डर्स की टोटल वोटिंग पावर कितनी होगी? 50%. सो अब 14% तो ए लिमिटेड खुद होल्ड करता है, तो उसका क्या रेशियो हो गया? 7%. और बी लिमिटेड जो है 10% ओन करता है, उसका क्या रेशियो हो गया? 5. 7 + 5 12. एंड जो प्रेफरेंस शेयर है वो भी होल्ड करता है ए लिमिटेड, तो 10% के तो 10 + 5 + 12 17%. So that's how it is not associate interest. अब क्लॉज सी के अंदर लिखा है कि अगर किसी जैसे 51% से ज्यादा किसी एक कंपनी के अंदर कोई एक कंपनी 51% से ज्यादा का लोन उसको एडवांस किया हुआ है ऑफ उसकी बुक वैल्यू ऑफ एसेट्स ऑफ द बोरोअर की बुक वैल्यू का अगर 51% से ज्यादा लोन किसी एक एंटिटी ने दे रखा है, तो उस केस के अंदर क्या होगा कि वो एसोसिएट एंटरप्राइज हो जाएंगे। अब इसके अंदर कुछ डेफिनेशन आती है। एक तो जो बुक वैल्यू है उसके अंदर हम क्या क्या नहीं ले सकते। एक तो अक्यूमुलेटेड लॉसेस नहीं ले सकते, डेफर्ड रेवेन्यू एक्सपेंडिचर्स है वो नहीं ले सकते। अब डेफर्ड रेवेन्यू एक्सपेंडिचर है, अब वो क्यों नहीं लेना चाहिए अपन को, ये क्वेश्चन है। एनीवन वुड लाइक टू आंसर? सो सो डेफर्ड रेवेन्यू एक्सपेंडिचर इसलिए नहीं लेना चाहिए क्योंकि इट्स नॉट अ it will so for see for that we have to first discuss the definition of what are the assets. Assets are the resources which is controlled by the SEC, which has future economic benefits, right? Guaranteed future economic benefits. Deferred revenue expenditure, it does not guarantee that for the any future benefits, because जिसके लिए जो भी एक्सपेंडिचर हुआ था, जिस भी रेवेन्यू को कलेक्ट करने के लिए, उसका प्रोबेबल होना बहुत ज्यादा जरूरी है, तो इसलिए ये नहीं आने चाहिए। और जो बुक वैल्यू ऑफ एसेट्स है वो टोटल एसेट्स लेनी है अपन को, नेट वैल्यू नहीं लेनी। नेट वैल्यू क्या होगी? एसेट, टोटल एसेट्स माइनस लायबिलिटी। बट इसमें सिर्फ एसेट्स की वैल्यू टोटल आएगी, उसका 51% अगर लोन हो गया, अगर एक एंटिटी ने दे दिया, तो वो एसोसिएट एंटरप्राइज हो जाएगी।
Just to add, even in this clause now, if you notice that the term directly or indirectly is not used over here in clause C, wherein clause A and clause B had used the terms directly or indirectly. So that means that for the purpose of clause C, if there is an indirect way of advancing a loan, then that might not get covered over here. It has to be a direct transaction because directly or indirectly word has not been used in clause C. And at the same time, the word that has been used is, and the ratio that has to be calculated is 51%, right? The 51% ratio has to be calculated of the loan that is advanced. It's not outstanding. It could be a situation wherein $100 were given, 10 was repaid, 90 is the outstanding loan. But when we calculate the ratio of 51%, it will not be calculated with 90. It will be calculated with 100. Because the word that has been, or the term that has been used is advanced. That's one. And second question that can come, that at what time or what point in time we have to calculate this ratio? Has it to be at the start of the year, mid of the year, end of the year, the highest balance of the loan value or highest balance sheet? At what time? So, you know, 92A says that all these kind of situations for deemed international transaction, if any of the condition is satisfied at any time during the year, even for 1 hour during the year, then the entities RAEs and transactions will have to be reported for whatever transactions have been entered. So this 51% of the book value condition, if it is satisfied at any time during during the previous year, then they will become AEs.
So will it not be difficult to keep a check on the total book value?
See, more or less, it says like 51% of the book value, the amount that has been advanced. So one figure that is certain is advancement of loan, that number you have. Question arises that what is the book value of the assets? Somewhere that calculation has to be kept and cannot be missed whether this trigger of 51% threshold is crossed or not. You may, or the management of the company may, will have to, or the accountant may rely upon even a management representation letter if the management says that this 51% value has not been crossed during the entire. Then for an accountant to safeguard, because an accountant has to issue a report on this, certify in 92, as per section 92E, may take a representation letter from the management. Should be the responsibility of the management, but at the same time, accountant should also be aware that whether there is any loan which is sitting on the balance sheet. If yes, then whether during the year we don't know that what would be the book value, right? But at the same time, a fair percentage can be calculated of 51% as at the end of the year or as at the start of the year, because those balances are available in the. If it is very close to 51%, 30, 35%, 40%, then a further deep dive may be carried. But like I said, each and every day you also say it's very difficult to keep a track that what could be the assets value on each and every day. And therefore, even it says assets, it does not say net assets, right? So even the denominator figure would be higher. So 15%, it's not that easy to cross the threshold. Had it been net asset minus liabilities, then the denominator would have squeezed and the ratio could have been easily been achieved. Right. So even it's a check that has to be done. It's a little difficult, but there are ways. Also, it cannot be escaped. There are ways to do it.
So अब क्लॉज डी के अंदर क्या है, क्लॉज सी के अंदर जो लोन था जो कि 51% से ज्यादा होगा तो हो जाएगा। क्लॉज डी के अंदर है कि अगर कोई लोन नहीं भी दिया हुआ और जो एक एंटिटी है उसकी टोटल बोरोइंग्स जो है उसका 10% अगर किसी और एंटिटी ने गारंटी भी कर रखा है तो भी वो एसोसिएट एंटरप्राइज हो जाएगी 10% और उससे ज्यादा, तो नॉट लेस देन 10%। गारंटी जो अगर ये सेक्शन आप देखो तो उसमें लिखा हुआ है वन, इसकी जो डेफिनेशन है, जो एक्ट लैंग्वेज है एक्ट के अंदर, उसमें लिखा हुआ है वन एंटरप्राइज गारंटीज नॉट लेस देन 10% ऑफ द टोटल बोरोइंग्स ऑफ द अदर एंटरप्राइज। अब इसमें कोई गारंटीज कुछ बताया तो नहीं कि कोई गारंटी कौन सी टाइप की गारंटी, कॉर्पोरेट गारंटी हो गई या फिर कोई और तरह की गारंटी, तो इसके अंदर नहीं बताया, इसलिए अ व्यू इज पॉसिबल दैट इट इंक्लूड्स ऑल टाइप ऑफ गारंटीज। सो क्लॉज ई इन दैट अगर किसी एक एंटरप्राइज है उसके किसी और एंटरप्राइज के पास, किसी और एंटरप्राइज ने उसके अंदर हाफ से ज्यादा जितने भी उसके बोर्ड ऑफ डायरेक्टर्स है उसके अंदर 50% से ज्यादा 50% से ज्यादा अगर उसके अंदर अपॉइंट कर रखे हैं उसने बोर्ड ऑफ डायरेक्टर्स के अंदर, ठीक है, किसी और एंटिटी ने, या फिर एक या उससे ज्यादा एग्जीक्यूटिव डायरेक्टर और मेंबर बोर्ड के उसने अपॉइंट कर रखे हैं, तो वो दूसरी एंटिटी है जिसने अपॉइंट किए वो उसकी एसोसिएट एंटरप्राइज है। अब इस केस में बोर्ड ऑफ डायरेक्टर्स जो है जो इसके अंदर क्या है कि अपॉइंटमेंट जो है बोर्ड ऑफ डायरेक्टर्स का या फिर एग्जीक्यूटिव मेंबर्स का या डायरेक्टर्स का, वो अपॉइंटमेंट जरूरी है, पावर होने से ही कुछ नहीं होगा। अपॉइंटमेंट, रियल अपॉइंटमेंट टू बी हैज टू बी डन for treating those two entities as associated enterprise. Now, for an example, A Limited has 20% equity shares in B Limited. Investment in B Limited also gives A Limited power to appoint 5 out of 7 board of directors in B Limited. A Limited has not exercised this power. Now, because A Limited has not exercised this power, these two entities will not be treated as associated enterprise. Let's take another example. A Limited has 15% equity shares in B Limited. Investment in B Limited also gives A Limited power to appoint 6 out of 8 board of directors in B Limited. A Limited has appointed 2 non-executive directors in board of directors of B Limited. Will A and B Limited will be treated as associate enterprise? Why? Because it has to be executive directors, not non-executive directors. So comes to the clause F. अब क्लॉज एफ भी बिल्कुल वैसे ही जैसे 26 वाली परसेंटेज का प्रोविजन था उसके अंदर बी जो क्लॉज था, सेम इसी के अंदर भी एक कॉमन पर्सन है या फिर कोई एंटिटी है, अगर वो किसी और दूसरी दो एंटिटीज के अंदर 50% से ज्यादा बोर्ड ऑफ डायरेक्टर्स या फिर वन और मोर एग्जीक्यूटिव डायरेक्टर्स को अपॉइंट कर रखा है एक एंटिटी में और दूसरी में भी सेम ऐसा ही है, तो वो दोनों एंटिटीज एसोसिएट एंटरप्राइज हो जाएगी। उन दोनों के बीच में कोई पावर या फिर अपॉइंटमेंट होना जरूरी नहीं। जैसे ये एग्जांपल है, ए लिमिटेड ने बी लिमिटेड के अंदर 50% से ज्यादा बोर्ड ऑफ डायरेक्टर्स के अगर अपॉइंट करें या फिर एक से ज्यादा, एक या दो उन्होंने एग्जीक्यूटिव डायरेक्टर अपॉइंट कर रखे ए लिमिटेड बी लिमिटेड में, सेम सी लिमिटेड में भी ऐसा किया है, तो बी लिमिटेड एंड सी लिमिटेड विल बी द एसोसिएटेड एंटरप्राइज। Now, for example, A Limited has appointed managing director in B Limited and 6 out of 9 members of the board of directors of C Limited. As 6 out of 9 is majority number is crossing, and managing director is executive director, so the conditions are satisfied. So, as per clause G, so two enterprises are deemed to be associated if one is fully dependent on the other for the use of know-how, patents, copyright, design, secret formula, etc. for the manufacturing or processing of goods, articles or business carried out by such enterprise. अगर कोई एक enterprise है वो दूसरी enterprise के ऊपर dependent है किस पे, जो उनके इंटेंजिबल एसेट्स है, फॉर एग्जांपल पेटेंट्स हो गए, कॉपीराइट्स हो गए, कुछ एक्सक्लूसिव एग्रीमेंट्स हो गए, उनके ऊपर डिपेंडेंट है। इसके लिए मैन्युफैक्चरिंग के लिए जो भी गुड्स अगर वो मैन्युफैक्चर कर रही है उसके लिए, या फिर प्रोसेस कर रही है कोई गुड्स, या फिर अब इसमें लिखा है एक और ऐड है, बिजनेस कैरिड ऑन। बिजनेस के अंदर सब कुछ आ गया, एक जैसे कि कुछ भी किसी भी टाइप का बिजनेस हो गया, फॉर एग्जाम्पल डिस्ट्रीब्यूशन आ गया, सप्लाई, अगर लॉजिस्टिक्स आ गया किसी एंटरप्राइज के लिए कर रही है, एक्सेट्रा जो भी आ गया, तो अगर वो चीज हो रही है तो जो दो एंटिटीज है विल बी ट्रीटेड एज एसोसिएटेड एंटरप्राइज। फॉर एग्जाम्पल एक ए लिमिटेड है, इंडियन कंपनी है, which has an exclusive distributor agreement with the US based beverage company, ठीक है। अब उसके पास exclusive rights है to sell in India. Does A limited and B limited associated enterprise? Yes. So as per clause H, अगर किसी अब क्लॉज जी के अंदर क्या था कि इसके अंदर जो जो प्रोसेस है, जिस जो एक उसको बनाने का जो एक प्रोसेस के ऊपर बात थी, कंट्रोल के ऊपर बात थी। अब एच के अंदर है कि अगर 90% से ज्यादा रॉ मटेरियल कंज्यूमेबल्स अगर एक एंटिटी को कोई और एंटिटी सप्लाई कर रही है, फॉर एग्जांपल अगर एक एंटिटी है ए लिमिटेड और दूसरी है बी लिमिटेड, अब बी लिमिटेड को जो प्रोडक्ट के अंदर वो डील करती है उसके अंदर उसको रॉ मटेरियल कंज्यूमेबल्स के लिए उसका जो टोटल यूजेज ऑफ रॉ मटेरियल कंज्यूमेबल्स है उसके लिए अगर उसको 90% वो दूसरी एंटिटी से ले रही है, फॉर एग्जांपल ए लिमिटेड से 90% और मोर, तो वो दोनों एंटिटी एसोसिएटेड एंटरप्राइज मानी जाएंगी। अब इसके अंदर या तो वो सिंगल सीधा ए लिमिटेड से ले रही है, ए लिमिटेड ही बी लिमिटेड को सप्लाई कर रही है 90% से ज्यादा, तो एसोसिएटेड एंटरप्राइज होगी। अब इसी के अंदर एक एग्जांपल आता है, मान लो एक कंपनी ए लिमिटेड, बी लिमिटेड और एक सी लिमिटेड भी है। ए लिमिटेड और बी लिमिटेड जो है वो एसोसिएट एंटरप्राइज है, ओके। बट जो उसको क्या बोलते हैं सप्लाई कर रही है, एक बात, एक कंपनी ए लिमिटेड और एक है बी लिमिटेड और सी लिमिटेड, सी और बी जो है वो एसोसिएट एंटरप्राइज है।
ए और सी एसोसिएट एंटरप्राइज है,
ए एंड सी इसमें एसोसिएट एंटरप्राइज है, और सप्लाई जो कर रही है गुड्स को वो सी लिमिटेड कर रही है। अब सी और बी जो है वो एसोसिएट एंटरप्राइज यानी कोई रिलेशन नहीं है उनके बीच में, तो एक इंडिपेंडेंट ट्रांजैक्शन हो गई, तो इसमें ट्रांसफर प्राइसिंग के प्रोविजंस लगेंगे नहीं। बट जो सी लिमिटेड जो है ना सप्लाई कर रही है वो जो किसकी गाइडेंस से कर रही है, ए लिमिटेड, तो इस वाले केस के अंदर क्या होगा कि सी और जो बी लिमिटेड है वो भी एसोसिएट एंटरप्राइज बन जाएगी। बट इसके अंदर एक कंडीशन है, जो प्राइस है ना, जो सप्लाई करने से कुछ नहीं होगा, बट जो प्राइस होनी चाहिए ना वो डिटरमाइन बाय ए लिमिटेड होनी चाहिए, जो एसोसिएट एंटरप्राइज है।
मेरा ऑफिस से जहां मैं बैठता
क्लॉज आई, अब इस वाले क्लॉज के अंदर तो रॉ मटेरियल की बात हो रही थी, अब इसके अंदर मैन्युफैक्चर्ड गुड्स की बात हो रही है, वेयर द गुड्स और आर्टिकल्स मैन्युफैक्चर्ड एंड प्रोसेस्ड बाय वन एंटरप्राइज आर सोल्ड टू अनदर एंटरप्राइज, by and the price and the condition are influenced by a associate enterprise। इसके अंदर एक एग्जांपल है, सेम वही एग्जांपल है, बस इसके अंदर डिफरेंस क्या है कि इसके अंदर 90% का जो क्राइटेरिया है वो गिवन नहीं है इस वाले क्लॉज के अंदर।
जो सिखा रहे हैं
बट
ये सब बच्चे हैं। आप समझो।
Amit, mute yourself. Yeah, continue.
क्लॉज आई, सो इसके अंदर 90% की जो मिनिमम कंडीशन है वो जैसे क्लॉज एच के अंदर दी हुई थी वैसे नहीं है, ठीक है। बट इसके अंदर कब जो एसोसिएट एंटरप्राइज कब होंगे, मान लो दो एंटिटीज है वो अपने बीच में कुछ भी गुड्स तो बाय सेल कर ही सकते हैं, बट उसके अंदर एसोसिएट एंटरप्राइज कब होंगे, बट उसके अंदर होंगे जब जो बायर है, जनरली एक प्राइस होती है किसी भी गुड्स की, वो कौन डिसाइड करता है, सेलर डिसाइड करता है। बट अगर इस केस के अंदर अगर बायर डिसाइड करेगा उस प्राइस को तो वो एसोसिएट एंटरप्राइज हो जाएगी। क्लॉज जी के एज पर क्लॉज जी, where one enterprise is controlled by an individual and the other enterprise is controlled by such individual। अब दो कंपनीज है, एक इंडिविजुअल है वो एक सिंगल इंडिविजुअल ही दोनों कंपनीज को ओन कर रहा है, तो उस केस के अंदर वो जो दोनों कंपनीज है वो एसोसिएटेड एंटरप्राइज है। अब या तो फिर एक कंपनी को एक इंडिविजुअल ओन कर रहा है या फिर उसके कोई रिलेटिव ओन कर रहा है, तो फिर वो एसोसिएट एंटरप्राइज होगी। या फिर जॉइंटली कर रहे ओन, एक को एक इंडिविजुअल कर रहा है, दूसरे को इंडिविजुअल या फिर उसके रिलेटिव कर रहे हैं जॉइंटली या फिर कैसे भी, तो वो भी एसोसिएट एंटरप्राइज हो जाएंगे। अब इसके अंदर जो कंट्रोल है ना, वो कंट्रोल्स मींस अ इंडिविजुअल अलोंग विद रिलेटिव हैज द पावर टू मेक द क्रूशियल डिसीजंस रिगार्डिंग द मैनेजमेंट एंड रनिंग ऑफ द टू एंटरप्राइज। जो इसके अंदर कंट्रोल की जो डेफिनेशन है उसके अंदर है कि पावर टू द इंडिविजुअल शुड हैव पावर टू मेक द क्रूशियल डिसीजंस ऑफ मैनेजमेंट, लाइक डे टू डे डिसीजंस, उसके जो भी जो क्रूशियल डिसीजन होते हैं कंपनी के, वो उसकी पावर हुई तो वो कंट्रोल माना जाएगा। और रिलेटिव की डेफिनेशन एज पर इनकम टैक्स जो भी नॉर्मली है, मींस हस्बैंड, वाइफ, ब्रदर, सिस्टर, लीनियंट, असेंडेंट और डिसेंडेंट। क्लॉज के आ गया। क्लॉज के अंदर है एक, इसके अंदर एचयूएफ है। एचयूएफ एक एंटिटी है, दो एंटिटीज है, उसको एक सिंगल एचयूएफ ओन करता है। तो सेम जैसे इंडिविजुअल वाला केस था पहले वाले क्लॉज के अंदर, सेम वही क्लॉज है, सेम केस है। एचयूएफ के अंदर भी सेम वही, अगर सेम एचयूएफ है, दो एंटिटीज है, तो उसको सेम एचयूएफ ओन करता है, तो वो दोनों एसोसिएटेड एंटरप्राइजेस। या फिर एक एचयूएफ ओन करता है, कोई एचयूएफ का मेंबर अगर ओन करता है किसी और एंटिटी को, तो भी वो एसोसिएट एंटरप्राइज हो जाएगी। या फिर मेंबर या फिर एक रिलेटिव ऑफ सच मेंबर, जो भी मेंबर है एक एचयूएफ का, अगर उसके कोई रिलेटिव भी ओन करता है और एक कंपनी को एचयूएफ या फिर उसके मेंबर या फिर अदर कोई रिलेटिव भी ओन करता है, तब भी वो एसोसिएट एंटरप्राइज हो जाएंगे। और क्लॉज एल के अगर कोई पार्टनरशिप फर्म है, अगर वो 10% से ज्यादा इंटरेस्ट अगर दूसरी पार्टनरशिप के अंदर ओन करते हैं, तो भी वो क्या बोलते हैं, एसोसिएट एंटरप्राइज हो जाएंगे। क्लॉज एम ऑफ 92, सेक्शन 92, इसमें अगर इसमें इट्स अ रेजिडुअल क्लॉज है। इसके अंदर क्या लिखा है, इसकी जो लैंग्वेज है वो है, देयर एग्जिस्ट बिटवीन टू एंटरप्राइज एनी रिलेशनशिप ऑफ म्यूचुअल इंटरेस्ट एज मे बी प्रिस्क्राइब। अब जो म्यूचुअल इंटरेस्ट है किस टाइप का होना चाहिए वो है, वो अभी तक इनकम टैक्स के अंदर प्रिस्क्राइब नहीं है।
So till see 92A to M, these are like 14 clauses which are deemed associated enterprise value. So if any of these is satisfied, then the enterprises will become ease of each other. And these are like overall 13. ACM if you count, these are 13 limbs for qualifying as a AEs.
अब एक सेक्शन और है 94A सबसेक्शन 2 क्लॉज 1। अब इसके हिसाब से ये सेक्शन 92 का पार्ट 94 है। अब इसके अंदर जो इनकम टैक्स अथॉरिटीज है, जो भी गवर्नमेंट है, उनको एक पावर दी है एक्ट के अंदर कि वो कुछ स्पेसिफाइड एरिया जुरिस्डिक्शन कर सकते हैं स्पेसिफाई। अगर वो जो एंटिटीज है अगर उसके अंदर वो ट्रांजैक्शन करती है तो दे विल बी ट्रीटेड एज एसोसिएट एंटरप्राइज। बट जो ऐसा एक कोई भी जुरिस्डिक्शन है अभी तक प्रिस्क्राइब नहीं हुआ, तो ये भी एक तरीके से रेजिडुअल क्लॉज ही है।
पहले साइप्रस प्रिस्क्राइब हुआ था, फिर उसको रिसेंट कर दिया।
हाँ,
because Cyprus was not exchanging information with India, therefore the Indian government notified Cyprus as the country or the contracting state, जिससे अगर आपके कोई भी ट्रांजैक्शंस है, भले कैसे भी हो, अगर आप E2M के अंदर फॉल नहीं कर रहे हो, लेकिन अगर आपको कोई भी साइप्रस एंटिटी के साथ कोई अगर ऐसा ट्रांजैक्शन किया है, तो those entities will be regarded as ease of each other. But the notification got rescinded because I think Cyprus started sharing information. There was some resolution achieved between the Indian government and the Cyprus government.
Now, एक बार जो जितने भी क्लॉजेस थे उसकी एक बार समरी बनाए। तो फर्स्ट क्लॉज तो हो गया जिसमें 26% से ज्यादा, अगर 26 और 26 से ज्यादा अगर उसमें वोटिंग पावर हो तो एसोसिएट एंटरप्राइज हो गया। सेकंड 51%। सेकंड हो गया अगर कॉमन है, अगर कॉमन 26% दो एंटिटीज के अंदर तो भी एसोसिएट एंटरप्राइज हो गए। थर्ड है 51% ऑफ टोटल लोन एडवांस, ठीक है। थर्ड आ गया 10% से ज्यादा की अगर गारंटी हो गई दूसरे एंटरप्राइज में तो भी एसोसिएट एंटरप्राइज हो गए। थर्ड हो गया अगर बोर्ड ऑफ डायरेक्टर्स के अपॉइंटमेंट। फिफ्थ है जो भी अगर बोर्ड ऑफ डायरेक्टर्स के अंदर अपॉइंटमेंट, अगर अपॉइंटमेंट है 50% से ज्यादा,
ये डायरेक्ट वाला क्लॉज,
ये डायरेक्ट वाला है। हाँ, डायरेक्ट वाला जिसके अंदर 50% से ज्यादा अगर बोर्ड ऑफ डायरेक्टर्स को अपॉइंट किया है या फिर वन और मोर एग्जीक्यूटिव मेंबर्स को अगर अपॉइंट किया है तो एसोसिएट एंटरप्राइज हो जाएंगे। अब इसके बाद सिक्स जो क्लॉज है उसके अंदर वो कॉमन वाले आ गए, अगर सब दोनों में के अंदर दोनों एंटिटीज के अंदर फुलफिल हो रही है डायरेक्टर्स वाली कंडीशन तो भी हो गई। जी के अंदर अगर उसके जो प्रोसेस का जो नो हाउ है अगर वो डिपेंडेंट है किसी और एंटिटी पे तो भी एसोसिएट एंटरप्राइज हो गई। और एच के अंदर 90% से ज्यादा रॉ मटेरियल अगर किसी एक एंटिटी अगर सप्लाई कर रही है तो अगर हो गए। और आई के अंदर जो उसका फिनिश गुड्स है वो अगर सप्लाई हो रहा है और उसमें अंदर बायर अगर उसकी प्राइस को डोमिनेट कर रहा है तो भी एसोसिएट एंटरप्राइज की जो कंडीशन है वो फुलफिल हो रही है। और जी के अंदर अगर सेम इंडिविजुअल है या फिर उसके रिलेटिव है या फिर उसके अगर जॉइंटली ओन करते हैं तो भी ये सेटिस्फाई हो रही है कंडीशन। अब के अंदर एचयूएफ है, एचयूएफ के अंदर उसके इंडिविजुअल उसके मेंबर्स एचयूएफ और उसके रिलेटिव्स अगर वो कर रहे हैं तो भी एसोसिएट एंटरप्राइज है। और एल के अंदर 10% ज्यादा अगर पार्टनरशिप अगर कर रही है तो उसके अंदर भी। और एम के अंदर जो रेजिडुअल सेक्शन है वो है। अब एक और जो गाइडेंस नोट है उसके अंदर एक और रिलेशनशिप बताई हुई है एचओ और एक ब्रांच के अंदर। अब एचओ और ब्रांच में एक तो हो सकती है कि
power to appoint board of directors of a company same as power to control the crucial decisions of a company. जैसे कि मैं अगर किसी अपॉइंटमेंट कर सकता हूँ बोर्ड ऑफ डायरेक्टर्स का तो वो पावर तो सेम हुई ना वाली पावर की मैं कंट्रोल कर सकता हूँ उसके क्रूशियल डिसीजंस।
कंट्रोल अगर अपॉइंट कर सकते हैं, अगर जिन डायरेक्टर्स को आप अपॉइंट करोगे अगर आप उनको कंट्रोल नहीं कर पाओगे तो उसको अपॉइंट क्यों करोगे, पहली बात तो ये एक तरीके से आप
जैसे बताया कि अगर मैंने अपॉइंट नहीं करा तो फिर मैं नहीं होऊंगा
हाँ,
रिलेटेड।
हाँ।
बट मेरे पास वो पावर तो है ना कि मैं क्रूशियल डिसीजंस को कंट्रोल कर पाऊँ।
अब ये
different. Both of them are different. One is power to appoint the board of directors, and second you are saying is to control the crucial decision making. See, technically speaking, these two could be different as well, right? You only have the power to appoint the BOD. You appointed the BOD. BODs are acting in their independent capacity. So even if you have appointed the BOD and you have that power, the two enterprises become agents of each other, right? But at the same time, once you're appointed, and and if you don't appoint, still you are able to control, the decision making or to have a control on the management of the another entity. Then also you can be AEs, right? But could be a different. These two powers can be different as well. Means you have one power, but you don't have another power.
What if they're saying कि अगर मैं अपॉइंट कर पा रहा हूँ तो मतलब इसका मतलब तो ये हुआ ना कि मेरे पास वो पावर है कि मैं डिसीजंस ले सकता हूँ सेट।
See, one is power to make decision making, and second is power to appoint board of directors. Right? You had the power to appoint board of directors, but you did not exercise it. Right? But therefore, you are not AEs because full exercise of the power has to be there. Now you are saying that power to appoint board of directors is like power to control. I would say that still could be different. So you had the power to appoint BOD, but you did not appoint. Someone else appointed the BOD, and the BOD is still functioning in an independent capacity. Then there could be a difference, right? And in that case, even you had that power, but still you did not exercise, you're not AE. And I'll not say that you have power or control over the management or the other BOD that was appointed. That could be different.
now अब एक एचओ और ब्रांच के बीच में जो रिलेशनशिप है, क्या एक ब्रांच और एक एचओ है वो भी एसोसिएट एंटरप्राइज होंगे? अब अगर क्या बोलते हैं फॉरेन के अंदर ब्रांच है कि एक सिनेरियोस में दो सिनेरियो हो सकते हैं। अगर एक तो या तो हेड ऑफिस फॉरेन की कंपनी होगी उसका ब्रांच इंडिया में होगा, या फिर ब्रांच बाहर होगा इंडिया की कंपनी होगी। तो अगर फर्स्ट सिनेरियो है जैसे कि फर्स्ट में है फॉरेन के अंदर एचओ है और इंडियन ब्रांच है, तो इस केस के अंदर क्या होगा कि वो वहां पे जो प्रोविजंस है ट्रांसफर प्राइसिंग के वो एप्लीकेबल होंगे, बिकॉज प्रोविजंस वहां पे एप्लीकेबल हो जाएंगे। ठीक है, बट अगर यही सिनेरियो हुआ इंडियन कंपनी है वो एचओ है और बाहर अगर ब्रांच है, तो उस केस के अंदर मतलब मैं एक क्वेश्चन पूछ रहा हूँ कि उस केस के अंदर वो जो प्रोविजंस है ट्रांसफर प्राइसिंग के वो एप्लीकेबल होंगे या नहीं होंगे? अगर बाहर फॉरेन के अंदर एचओ है और इंडिया में ब्रांच है तो एप्लीकेबल होंगे। अगर इंडिया की क्यों होनी चाहिए?
तो सप्लायर हेड ऑफिस से सारा सामान जा रहा है 90% से
हाँ सेपरेट एंटिटी ब्रांच है।
हाँ, तो
So all are requested to wait for 1 minute. There is some technical issue. इससे नेट से नहीं Yeah, Archit, you can start now.
Yes sir. So अब इसके अंदर अब इंडियन अगर इंडिया के अंदर कोई एचओ है तो बाहर अगर उसकी फॉरेन ब्रांच है तो उस केस में मैंने बताया जैसे कि नहीं होगा क्योंकि उसके अकाउंट्स लास्ट में जाके कंसोलिडेट होंगे। बट अगर कोई एक और एसोसिएट एंटरप्राइज है बाहर, ठीक है, और ब्रांच जो है वो उसको सप्लाई कर रही है, ठीक है, तो उस केस के अंदर जो ट्रांसफर प्राइसिंग के प्रोविजंस है वो अप्लाई होंगे, जैसे जैसे फॉरेन जो ब्रांच है वो भी बाहर है और जो एसोसिएट एंटरप्राइज है एक और जो 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 क्लॉजेस बताए थे उनको फुलफिल कर रही है। तो उस केस में क्या होगा, उन दोनों के बीच में कोई ट्रांजैक्शन हो रहा है जो भी ट्रांजैक्शन जो जैसे मानव आगे बताएगा जो भी फुलफिल करते हैं, तो उस केस में क्या होगा कि ट्रांसफर प्राइसिंग के प्रोविजंस लग जाएंगे। अब जैसे एक एग्जांपल है कि इंडियन कंपनी है, इंडियन कंपनी हैज अ ब्रांच इन द यूएसए, Indian company also has a subsidiary company in US company. The USA branch is rendering certain services to the US company. Since Indian company and USA branch are the same legal entity for the application of Indian transfer pricing regulations, hence the transaction between the US branch and US company will be considered as transaction between Indian company and US company. So now Sakshi will continue.
Before Sakshi starts, I think, yeah, Rishabh is there. So I would just like to have words from Rishabh for 2 minutes as words of appreciation, as well as that what's his feeling about the overall class taken by Rishabh. Sorry, Harshit. Rishabh, if you are there, you can just mention your comments. So anyways, I think Rishabh may not be available. So Sakshi, you can continue now.
Good afternoon, everyone. This is Sakshi this side. So I'm going to explain responsibility of an enterprise and the firstly, responsibility of an enterprise. Objective of maintaining transfer price documentation. Firstly, responsibility of an enterprise is to maintain documents and keep their records. So objective of maintaining transfer price documentation are following. To ensure that taxpayers give appropriate consideration to tax pricing requirements in establishing prices and other conditions for transaction between associated enterprise and in reporting the income derived from such transaction in tax returns. This refers that it have to keep an eye on the establishing prices between associated enterprises to provide tax administration with the information necessary to conduct an informed transfer pricing risk assessment and to provide tax administration with useful information to employ in conducting an appropriately thorough audit of the transfer pricing practices. Audit के लिए use आता है ये और tax assessment के लिए use आता है. Then next we will see section 92D, maintenance information and documents. So we will maintain two types of files. Firstly, local file. Local file contains FSC entering into international transactions or specified domestic transactions required to maintain documents as specified by CBDT. All the transactions which assessee is entering is to be recorded in local file. Then next is master file. The constituent entity of an international group shall keep and maintain such information and document in respect of an international group as may be prescribed. In master file, the entity will give the overview of international group, overall international.
Actually, over and that's interestingly. So we read 92A, right? A stands for associate enterprise, so 92A. And Rishabh even mentioned 92B. B is like ghar wale transaction, he said. It's like international transaction. Over here it's D. D means document. So you remember in this way, because when I was reading 92D, I said D is for document, so it's 92, it has been referred over here.
Then constituent entities shall furnish the information and documents referred therein to authority prescribed under section 286 within the time and manner as may be prescribed. Section 286 will be referred there. Then the AO, assessing officer or corporate income tax officer may in the course of any proceedings under this act require any person referred to point 1 to furnish any information or document referred therein within 30 days from the date of receipt of a notice. It may be extended by further 30 days, but amendment in Finance Bill 2023 has been proposed to reduce this time to 10 days as told by Rishabh. Then every small transaction is not to be documented. So there is a specified limit. So documents are required to be maintained only if value of international transaction is more than 1 crore. Okay. Then specified, what about specified domestic transaction? As Rishabh sir told that specified domestic transaction has a limit of 20 crore on. Then
so just adding on what she said that see over here it talks about documents that are required to be maintained. If the threshold of 1 crore is crossed, then only the documents are required to be maintained, which we typically call transfer pricing study, right? TP study. TP study is a very lengthy, detailed document. She would have put in the contents that has to go into the TP study. But the TP study documentation is required only if the value of the international transaction exceeds 1 CR. But the report under 90 has to be furnished if the value of transaction is 1 rupee. You may not require to maintain a TP study for it, but a report of accountant under 92E has to be furnished. 92E is a report of an accountant. It's a separate document. 92E has a separate format. It's a format which is specified by the government. You have to report all these falana bilka sab kuch hai uske andar, right? And this is a study. If the threshold is crossed, then the study needs to be made.
And then documents are required to be kept for 8 years from the end of relevant assessment. Then we are going to section 286, furnishing of report. Which report? CBC report. So firstly, I am going to explain what is CBC report. CBC report stands for country by country report. CBC report has to be submitted by parent entity. This parent entity is the entity who is responsible for making consolidated financial statements of its international group. And other entities other than parent entity are known as constituent entities. So what is CBC report? CBC report has to be submitted by parent entity of an international group to prescribed authority in its country of residence. So for example, take HUL, Unilever Limited. It is an international group and its parent entity is situated in UK, UUL. And we have HUL in Pakistan, it is PUL, and in Nepal, NU. So parent entity is in UK. So CBC report will be submitted by UUL to the UK government. And Indian government and Pakistan government will take the report from UK government. Okay, and the report contains what? It contains the amount of all the information based on CFS. It contains amount of revenue, profit before income tax paid and accrued, or total employment, capital, cumulative earnings, and tangible assets. Then, as explained, parent entity is the entity leading entity, and other entities are known as constituent entity. So, on going back to the section 286, parent entity, if parent entity is resident in India, it shall be required to furnish CBC report if the group revenue as per CFS of last year is 6,400 or more in respect of the group in form 3CAA.
Forget the word crores.
6,400 crores. 6,400 crores or more. So, for example, Adani India, it is also an international group. Adani India, it have its parent entity in India. So, it have to furnish the CBC report to Indian government, and its constituent entities are situated in Pakistan, USA, and other countries. So, these are constituent entities. So, their government will ask for the CBC report from India. Then, non-resident entity. If the parent entity is non-resident in India, the resident constituent entity of the international group shall notify and form 3CAs at least 2 months prior to due date from furnishing CBC report stating whether it is an alternate reporting entity of the international group. What is alternate reporting entity? Alternate reporting entity is an entity designated by parent entity to furnish or submit the CBC report. Okay, so whether it is an alternate entity of the international group, or if it is not alternate, then it has to furnish the details of parent entity or alternate reporting entity of the international group and their resident countries. Then it is a form 3CAD. So in part A of the 3CEAD, it shows the allocation of income, tax, and business activities. Then part B, it shows the multinational incomes, multinational enterprise group included. And in part C, it other information as maybe. Then another conditions of section 286 is resident constituent entity other than parent entity or alternate reporting entity shall have to furnish CBC report in India. If parent entity of the group is resident of a country or territory in which इन 3 conditions के अंदर अगर parent entity कोई और जगह resident है पर तो भी अपनी resident constituent entity को furnish करनी पड़ेगी CBC in which it is not obligated to file CBC report. उस country में उनको CBC report file नहीं करनी. With which India does not have an arrangement for exchange of CBC report, or which is not exchanging information with India even though there is an agreement and this fact has been intimated to JDI. Then if there are more than one resident constituent entity of the group, then group can nominate one constituent entity in form 3CEAE who shall furnish the CBC report on behalf of the. This is form 3CEAE. This contains name of the international group or parent entity, constituent entity, all the information of international group. Now this is an example or a question. You all have to answer this. See.
Can you also read for the benefit of everyone?
So, an international group consisting of A Limited, B Limited, and C Limited, in which A Limited is a parent entity and others are constituent entities. Case 1, A Limited is resident of India and other two are non-resident. Which entity has to file CBC report in case of A? As it is resident, it has to. Then case 2, A Limited is situated in Dubai, B Limited is in India, and C Limited is in UAE and is designated as alternate reporting entity. Then how Indian government will get the CPC report? From UAE. From UAE. Then case 3. A Limited is situated in Dubai, B Limited is in India and designated as alternate reporting entity. C Limited is in UAE. So which B Limited is required to submit. Continuing case 2, but India and UAE don't have an agreement of exchange of report. Then which country will submit the CBC report? B Limited will submit the report as A Limited, B Limited, and C Limited do not have a common interest, or they do not have an agreement of exchange of report. So B Limited will file the CBC report. Last, A Limited is a non-resident and other two are resident companies. So which company will submit the CBC report? A Limited will, because A Limited is parent entity. And among other two resident companies, one will furnish the details of the CBC international.
So A Limited will file the report, the CBC report, with that country, right? Will not file it with India. The resident entity, whichever entity has been designated as an alternate reporting entity or a constituent entity, then that entity will furnish a form to the Indian government saying that I am a part of a group of A Limited, of which A Limited has filed CBC report on that. So if the Indian government wants any CBC reports, the Indian government can get it from that country.
Then responsibility of enterprise comes to an end. Then next topic is responsibility of accountability.
So before that, see, responsibility of an enterprise, what we studied, that there are of course some filings that have to be done to the Indian government. And at the same time, what's important is the TP study. So the TP study responsibility is on the company. And that's called local file over here, which we otherwise say it as a transfer pricing study. That is one local file, another one is master file, and third one is the CBC report. So in a nutshell, or in a broader sense, these three reports or responsibilities are there for the enterprise as a whole. If it is a resident of India, then CBC also gets attracted because ultimately the resident is in India of the entire group. However, if the resident if the parent entity is not a resident of India, means it's kind of a subsidiary and parent is somewhere located in US or UK or Singapore, then not the CBC, but of course a local file has to be maintained, and these other filings in Form 3CAEC will have to be done to inform the Indian government that that I am a part of a group and you can collect the CBC report from this entity.
Then responsibility of accounting. Accounting means chartered accounting as defined in Section 2, subsection 1, Clause B of the Chartered Accountant Act 1949, who holds a valid certificate of practice under Section 6, Section 6, subsection 1 of that Act, but does not include following things, which means these conditions makes chartered accountant ineligible for being appointed as an accountant. So there are two cases. Firstly, in case of company and other cases. So we'll consider other than company cases first. The assessee himself, or in case of the assessee, being a firm or AOP or HUF, and any partner of the firm or the member of the association or the family cannot be appointed as chartered accountant.
We talk about the first exception of the assessee himself. So, for example, if a firm, because an accountant has to furnish a report, right? And an accountant means person who's a CA defined as per the CA Act. But there is an exception that the assessee himself cannot be an accountant. So, for example, a firm of chartered accountant on which transfer pricing regulations apply, then the firm cannot certify its own report, right? Because the assessee himself would get covered in this exception, and it cannot issue a report of itself. Similarly, in this clause 2, 3, 4, 5, it's similar to that. That if you're either your relative, you have a common control, or some other employee, an employee of your own firm or employee of your own organization, that cannot be covered. The baseline intention is to ensure that the independence or there is no conflict of interest between the person who's furnishing the report and the person of whose the report is getting furnished. So, see, if you understand the bottom line intention, then you'll be able to navigate what are the exceptions over.
In case of the assessee being a trust institution, any person referred in clause A, B, C, C of the section 13. In case of any person other than persons referred in subclause 1 and 2, the person who is competent to verify the return, any person of any relative of the person referred in subclause 1, 2, 3, any officer or employee of the assessee, an individual who is partner or who is in the employment of an officer or employee of the assessee, then an individual who or his relative or partner is holding any security of or interest in the assessee, provided that if relative holds not exceeding 100,000 means 1 lakh rupees, then he is eligible. Okay. If the individual is indebted to the assessee, also 1 lakh rupees is the limit, then has given a guarantee or provided any security in connection with the indebtedness of any third person to the assessee. Here also 1 lakh rupees is the limit. A person who, whether directly or indirectly, has business relation with the assessee, a person who has convicted by the court of an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. Other than company having cases has been completed. So we have read CA Inter, and in CA Inter we had learned about the section 141 of Companies Act, where the ineligibility or disqualification of auditor was there. So anybody would like to say some points of the disqualification or ineligibility? The points same. These points are other cases points are same over here. So some questions are there for you. First, Mr. P is a practicing chartered accountant and Mr. Q, the relative of Mr. P, is holding securities of ABC Limited, having face value of 90,000. Whether Mr. P is qualified for being appointed? Question 2. Mr. Ashish, a practicing chartered accountant, is holding securities of XYZ Limited, having face value of 900. Whether Mr. Ashish is qualified because he himself holds. Then question 3. Mr. Anil, a chartered accountant, is a partner of a firm and has been appointed as an accountant of Lakshman Limited in the annual general meeting of the company held in September 2018, in which he accepted the assignment. Subsequently, in January 2019, he offered another chartered accountant who is the manager finance of Lakshman Limited to join the firm of Anil as a partner. He can be on. When other relevant points, the issue of a report under section 92A being a recurring assignment for expressing a professional opinion, the accountant accepting the assignment should communicate with the accountant who had done the examination at earlier year. The accountant should obtain from the assessee a letter of appointment for conducting the examination. Then it would be necessary for the accountant to identify and assess the risk of material misstatement, whether due to fraud or error. Accountant should ensure that he receives a standard management representation letter in respect of all oral representation explicitly or implicitly given to him. The report by the accountant given under section 92E is issued in accordance with such particulars as have been prescribed in Form 3CEB on or before 31st October of relevant assessment date. Now we will see Form 3CEB. It contains all the declarations by the accountant. We have examined the accounts and all. Then professional misconduct. If the accountant performs any misconduct, he will be liable under Chartered Accountant Act 1949, and ICI's disciplinary jurisdiction will prevail in this regard. Finance Act 2017 has introduced Section 271J for levying penalty on accountants for furnishing incorrect information in reports or certificates furnished under any provision of the Act. The assessing officer or commissioner in such cases may direct the accountant to pay a sum of 10,000 for each such report or certificate. Now I would like to invite Manav for further.
Give me your slides.
Yes, yes.
So good afternoon, everyone. So till now, I hope you all might be clear with the whys and whats of transfer pricing. So in the later part of the session, we'll try to understand when and where's of transfer pricing, like in what cases transfer pricing becomes applicable. So chapter 4 of the guidance note describes international transaction and discusses more about it. So till now, we know transfer pricing is applicable on international transactions. So we need to understand what is international transaction. So before going in detail about international transaction, we need to understand what is a transaction defined under this guidance note. So the guidance note states as a transaction includes any arrangement, understanding, or action in concert, whether or not these are informal or in writing or legally enforceable or not. So simplifying the above definition, we could say that transaction includes any arrangement, understanding, or action. And these action, arrangement, or understanding might be formal or informal, in writing or in oral, or might be legally enforceable or not. So for instance, we take an example where Flipkart India agrees to pay rupees 2,000 crore to Meesho as non-competence fee, with an agreement to not operate in India for next 5 years. So this was a formal agreement, was in writing, and was legally enforceable. So this scenario falls under the definition of transaction, which we discussed earlier. And even if in this scenario, the transaction was not formal, was oral, and was not legally enforceable, still the above scenario would fall under the category of transaction. So now in the above scenario, if Flipkart, instead of paying the non-competence fees to Meesho, would have paid the non-competence fees to Amazon Incorporation of USA. So this transaction would be an international transaction or not? So the answer is obviously yes, because the two entities taking part of the transaction are sitting in two different taxable countries. But the main question which lies here is that this international transaction is relevant for transfer pricing purposes. We'll find out in the later. So next we'll move on to international transaction. So now Section 92B of the Income Tax Act defines international transactions, and it lays down the following conditions. First, the transaction should be between two or more associated enterprises, either or both of whom should be non-residents, and the transaction should be in nature of purchase, sale, or lease of intangible property, provision of services, lending or borrowing of money, or any other transaction having bearing on profits, income, or losses or assets of such enterprise. Now, the definition expressly adds point and states it shall include a mutual agreement or arrangement between two or more AEs for allocation or apportionment or any contribution to the cost or expense incurred or to be incurred together in connection with a benefit, service, facility provided or to be provided to one or more such entities. So now let's come back to a Flipkart and Amazon case scenario. So here we shall ask ourselves one important question. Are Amazon and Flipkart associate enterprise? So not in this world. So this transaction is not relevant for the purpose of transfer price. But now in this scenario, if Flipkart instead of paying such amount to Amazon paid the amount to Walmart Incorporation USA, which is an associate enterprise of Flipkart, would this transaction be relevant for transfer pricing purpose? Yes. So now we should understand one another aspect of international transaction, which is deemed international transaction. So according to subsection 2 of 92B, a transaction between an enterprise and an unrelated person shall be deemed to be a transaction between A's if in relation to that transaction there exists a prior agreement between such person and the associate enterprise, and the terms of the relevant transactions are determined in substance between such unrelated person and the associate enterprise. So we shall understand this deemed international transaction concept with the help of an example. So now we'll take the same example. Flipkart India and Walmart Incorporation are associate enterprise, and there exists another entity, Bansal Brothers Limited, Bansal Brother Limited, which is situated in Singapore. So now Bansal Brother Limited and Flipkart are not related in any sense, but Bansal Brother Limited and Walmart have a prior agreement whereby they decide the conditions of the transaction that is to be taken place between Bansal Brothers and Flipkart. So even though the transaction is between Flipkart and an unrelated independent party, this would qualify as an international transaction and the transfer pricing provisions would be applicable on it. So the Finance Act 2014 amended the said section and said that even in the previous scenario, if the unrelated third party, which was Bansal Brothers Limited in our example, was situated in India, then also the transaction would fall under the transfer pricing guide. So one more thing is cross-border transactions. We might often get confused between international transaction and cross-border transactions. So what is a cross-border transaction? A transaction is considered to be a cross-border transaction if it originates in one country and gets concluded in another. And this has been defined in Chapter 10 of the Act. So a transaction which is not a cross-border transaction may still be an international transaction, and an international transaction might not be a cross-border transaction. So for example, we may assume that there are two US companies. One of the US company has its wholly owned subsidiary in India, and another US company has its establishment or a branch in India. So if the Indian subsidiary of US company, if the US company subsidiary in India enters into a transaction with foreign branch of the company, would it be an international transaction? No, it would not count as an international transaction for transfer pricing purposes, as neither of the party is an Indian resident. So we might understand this with another example. So there is an Indian company which has its two subsidiaries. So subsidiary 1 and subsidiary 2. So there exists a foreign branch of subsidiary 2, and subsidiary 1 enters into a transaction with the foreign branch of subsidiary 2. So this shall not be regarded as an international transaction, because both the parties of the transaction are Indian residents, and one of the most important conditions for international transaction is that either or both of the parties need to be non-residents. So next we'll understand what will a chartered accountant or a TP officer would assess in such international transactions. So one main and major aspect of this international transaction is business restructure. So while we go through the guidance note, we won't find anything in the guidance note nor in the Income Tax Act stating or defining the business restructuring or business reorganization. So here the guidance note refers to the OECD transfer pricing guidelines, which states any cross-border deployment, reallocation of functions, assets, or risk among affiliated entities of a multinational enterprise. So this is the definition of business restructuring or reorganization. So it might become more clear when we take up certain examples. So some of the examples are like first, any termination or substantial renegotiation of existing arrangements which are having a heavy impact on the business of the entity. Next is transfer of IP rights to central entity of the group, which is basically centralization of the core technology of the group. Next is outsourcing of a manufacturing to associate enterprise in a low-cost location. So what it is basically, for example, we assume both the wearables manufacturers, which was originally manufacturing its products in India, has now decided to stop in-house production in India and will import products from JBL Vietnam Limited, which is incorporated in Vietnam and which is its aim. So this would be categorized as a business restructuring transaction. So basically business restructuring has two modes, external and internal. External takes place by the way of capital reorganization, which is capital reduction and buyback, issue of shares, acquisitions, which can be in nature of business acquisition, stock purchase, asset purchase, scheme of rearrangement involving mergers and demergers. And internal modes of restructuring include transfer of intangible property rights to central entity, conversion of full-fledged distributor to a limited risk distributor, or conversion of a full-fledged manufacturer to a limited risk manufacturer. Next is like we all have been hearing that transaction should be at arm's length price. Each and every transaction that comes under this purview should be at ALP concept. So how do we apply this ALP concept? So it involves various steps. So just like an audit, before starting the audit, what do we do is we try to understand the entity. So here also, first of all, we need to try and understand the transaction. We need to understand and identify the scope of arrangements. We need to perform a functional analysis of the entity pre and post restructuring, and we need to examine, analyze, and refer to any relevant contract that has a major impact on the business restructuring concept. Then the next step involves selecting the most appropriate transfer pricing methodology. So the transfer pricing should be such that the business restructuring transaction should be at such a price that when such transaction would have taken place between two independent unrelated parties. So the compensation or the price they would pay, that price should be the actual price that should prevail had the transaction been taken between the related associate entities. So the consideration may be determined by considering the following. An arm's length outcome is one that makes a business sense taking into account the options that are realistically available. And the next is an independent party dealing at an arm's length would seek to protect its economic interest. So step 3 is applying the most appropriate method and determining an arm's length outcome. So why would an entity enter into a business restructuring transaction? Because it might need to derive an economic or commercial advantage. So the price should be such that it makes commercial sense to the entity who are entering into this contract. Next is capital financing transactions. The associate enterprise often enter into capital financing transactions, and these transactions have a bearing on the profits and losses of the associate enterprise. And these transactions include any type of long-term or short-term borrowing, lending or guarantee, purchase or sale of marketable securities, or any type of advance, payments or deferred payment, or receivable, or any other debt arising during the course of business. So what an accountant needs to do in such a situation? The accountant should consider disclosing such transactions arising during the course of business, either by way of a note in the detailed observation remarks section of the respective underlying primary transaction to which such balance pertains, or make a separate disclosure of such balances along with description of the underlying primary transaction to which it is closely linked. Also, the accountant shall determine the conditions of certain financial transactions, that these conditions are consistent with the arm's length principle or not. The next major thing is tangible and intangible property. So the scope of intangible property as defined in this act is very wide ranging from the market related intangible assets to technology related, database related, customer base related, contract related, and many others. So given the wide scope of phrase, the accountant will need to examine due diligence that all relevant transactions are considered and neither of transactions are missed. And all these transactions are included in the books of accounts of the assessment. The accountant should also review the record of any pending or past transfer pricing assessment of appeals of the assessee to identify any transaction not otherwise apparent from the books of accounts. One of the most important aspects is to identify intangibles which are owned by the group and the Indian entity. So, what are the available methods for valuing the intangibles in transfer price? So, valuing of intangibles is a very critical issue because you cannot determine the exact price prevailing in the market. So, there are three approaches. The first is the market approach, where you estimate the value of the transaction based on actual market transactions, where you need to gather the market data for similar comparable transactions. The next is income approach, where you consider income and expense data relating to all intangible assets, and based on the cash flow projections and discount rates, you compute a value for your intangible asset. The next is cost approach, where the intangible assets are valued on the basis of their cost to create. Like if you created such a similar asset at the present scenario, what would it cost? So the cost that you would incur would be treated as the value of intangible asset. Next is services, finance, and cost. Provision of service here refers to trade-related services like intellectual property rights and trade-related investments. So according to OECD guidelines, there are two main issues while analyzing intergroup services. Whether an intergroup service charge that should have been provided, and what the charge should be in accordance with the arm's length principle. So in this regard, accountant may refer to the following aspects or should go through the following tests to determine whether the intragroup services have been really rendered or not. So first test is a benefit test. So here the accountant needs to check whether if an independent enterprise in comparable circumstances would have been willing to pay for the same activity performed for it by another independent enterprise. If the activity is not one which the independent enterprise would have been willing to pay, the activity ordinarily should not be considered as an intragroup service under the arm's length principle. The next is shareholder activities. An activity that a group member performs solely because of its ownership interest in one or more other group members. This type of activity would not be considered to be an intragroup service and thus would not justify a charge to other group members. The next test is duplicate activities test. An activity which is undertaken by one group member that merely duplicates a service that another group member is performing on itself. In this case, the accountant shall examine the information provided by taxpayer to determine whether intragroup services are different, distinct, and are not additional or complementary to the activities performed in-house. The next is incidental benefits. There can be some cases where an intragroup service performed by a group member, such as a shareholder or coordinating center, relates only to some group members but incidentally provides benefits to other group members. So these activities would constitute an intragroup service to particular group members involved. So the next is cost contribution arrangement. Many a times, associate enterprise enter into an agreement or an arrangement whereby they agree to contribute cost or share cost or try to apportion cost in such a way that the benefit is derived for one or more of the associate enterprise. So the accountant here should gain an understanding of the transaction and make appropriate reporting for the same. The next is free of cost transfer of goods and services. When determining whether or not international transactions exist in the books of accounts or records of the assessee, the accountant shall also consider the free of cost goods, services rendered or availed by the assessee. The accountant will need to carefully examine the necessary facts, conditions to assess and identify such transactions that are not otherwise apparent from books of accounts or records of the assessee. Where amounts are recognized on a notional basis in books of accounts due to applicable accounting standard, the same should be in conformity with the arm's length principle. So next topic for our discussion is specified domestic transaction. So for the purposes of this section and sections 92, 92C, 92D and E, specified domestic transaction in any case of an assessee means any of the following transactions not being an international transaction, namely any transaction referred to in section 80A, any transfer of goods or services referred to in subsection 8 of section 80IA, any business transacted between the assessee and other person as referred in subsection 10 of section 80IA, any transaction referred to in any other section under chapter 6A or section 10AA to which provisions of subsection 8 or subsection 10 of section 80IA are applicable, or any business transacted between the persons referred in subsection 6 of section 15BAB, or any other transaction which we as we prescribed. And one important condition here with and is that where the aggregate of such transactions entered into by assessee in previous year exceeds the sum of rupees 20 crores. So the threshold limit here in specified domestic transactions is of rupees 20 crores. So next we'll discuss any transaction that is referred to in section 80A. This provision requires that the inter-unit transfer of goods and services between eligible and other units of the same taxpayer should be recognized at market value of such goods and services as on the date of transfer for computing deductions admissible to the taxpayer under the specified sections of 6A. So all the transactions above 20 crores satisfying the above condition will be recognized as a specified domestic transaction. Next is any transfer of goods and services referred to in subsection 8 of section 80IA. So above provision entitles the assessing officer to compute profits and gains of eligible business based on market value of goods and services transferred between an eligible and non-eligible business only if the consider for such transfer as recorded in books of accounts of the eligible business does not correspond to the market value of goods and services. The explanation under this provision has also been expanded to provide that market value shall be computed at the arm's length price if the inter-unit transfer constitutes specified domestic transaction. So next is any business transacted between the assessee and other person as referred to in subsection 10 of section 80IA. So section 80IA clause 10 applies to transaction between assessee and other person which results in excessive profits in the hands of assessee, either owing to close connection with other person or for any other reason. The dealings between the taxpayer and other persons get covered by section 80IA subsection 10, provided the course of business between them is so arranged that the transaction produces more than ordinary profits. And the last condition for specified domestic transaction is any transaction referred to any other section under chapter 6A or section 10AA to which provisions of such subsection 8 or subsection 10 of section 80IA are applicable. With this, we come to an end for today's discussion.
Right. So see, guys, the specified domestic transaction now, you read the provisions. It's precisely applicable on very limited sections of the Act, right? Section 10AA or a 10A, wherein deduction is being claimed on account of a unit which is operating from a SEZ area. तो अगर वो 10AA या 10A या 10AA के अंदर डिडक्शन क्लेम करते हैं तो उसके ऊपर लगता है, या फिर 80IA की जो subsection 8 और subsection 10 है जिसके अंदर AO has been empowered to compute the arm length price taking into consideration the market price. But what are the nature of businesses over there? Generation, transmission of power, industrial undertaking related deductions. So to an extent, बहुत आम जगह आजकल ये specific domestic transaction का लगता है. But at the same time, if you look at the international transaction now, and this is homework for all of you, you have to find out, what is the latest, what is the prime litigation which is going on the topic of international transaction. Right now, I'll just give you hints that that this litigation is pending before the Supreme Court. Almost all the multinational companies are part of this litigation. This litigation or this allegation started when the transfer pricing officer started saying that the Indian entity which has incurred a transaction, which is it's simply called AMP, which is like advertisement, marketing, and promotion expenditure. Go home and just find out that what is the litigation, what is the allegation of the TPO, what are the arguments taken by the assessee, what the court have held till yet, because the Delhi High Court has come up with its verdict, and the verdict is in favor of the taxpayers. It has been challenged before the Supreme Court, and it's a very big litigation which is presently ongoing in India in transfer pricing arena. So you easily find out. You'll just do AMP, write AMP on Google, and you'll find out hundreds and hundreds of articles and case laws on it, because it's a very, very fine. Just pull out a case law, read entirely, because even the judgments which are there, they are too lengthy judgments. It's 200, 300 page lengthy decisions. So taking into consideration everything, then in the next class we can at least, and it's related to international transactions, by the way. That's why I'm saying just read it, and then in the next class we'll discuss that whether the allegation that has been made by the TPO in that AMP related adjustment, whether it is an international transaction at the first place or not. Because somewhere the entire premises of this, whether it is an international transaction or not, it's governed by that. And court has very nicely observed and distinguished whether the transaction can be regarded as an international transaction or not. So with this, like this is international, one is specified domestic transaction. SDT has a threshold of 20 CR. International transaction does not have a threshold of even 1 rupee. And therefore, a conference report has to be issued for both the international transaction and SDT if the SDT value processed 20 CR. I think with this, this first phase of this entire discussion, we can conclude. But like I said, just go home and do research, find out the case laws. This is one transfer pricing, litigation that is ongoing. You get me another 2 litigations that are going on the transfer pricing front, because you'll easily find it out that what are the prime litigations that is going on in India on this. Study those, then you'll be able to connect better and understand that why transfer pricing area is such a big market space for consultants.